Welcome back, traders and investors. We have Lydia Finkley on the line. She is a Forex trader and the author of FaithMightFX.com. Lydia, thank you so much for joining us this morning. How are you today?
I'm great. I'm great. Thanks for having me back.
It's always good to have you on the show. So I know you like to trade the British pound sterling, and I saw you post something on StockTwits about how it was experiencing a little weakness yesterday having to do with trend and UK economic data. Can we start with that?
Sure, sure. So if we go back a year ago to the massive rally that we had in 2013 up to $1.72, we were seeing a trend in the data that was really very bullish, showing that United Kingdom, the British economy was strong, it was robust. Then we started getting news maybe 8 months into the year that it was one of the top 10 recovering economies, and so we saw the pound dollar in particular, we saw the pound dollar push up higher, and we saw the euro pound actually push a lot further lower. So what we're now seeing is a kind of reversal in that trend of data, and it usually tends to lead with manufacturing and construction, at least out of the UK, and we're seeing that slowly deteriorate. The PMI number Friday was weak. The manufacturing number yesterday was weak. And then services, the two-thirds of the economy there is the consumer base, and retail sales is really important. We saw services slip today, and so we're starting to see a trend. Well, we're starting to see a trend, at least in the numbers, that might suggest that the economy might not be as strong as suggested. And it's worrisome when your retail sales number slips, in the midst of holiday season. So that's an interesting thing to kind of look out for this year. If we continue to see that kind of deterioration, I think we will see the pound continue to move lower, not just on the back of dollar strength like we really have been seeing for the last part of the year, but on the back of pound weakness.
So what about some other currencies in the Eurozone, specifically the euro?
Well, it's safe to say the euro is just getting slammed. We saw the euro dollar reach levels we hadn't seen since 2008, and even before the crisis. And it's starting to. What's interesting is that we're not seeing new lows in the euro pound. And we would want to see, if you look at a monthly chart, we see this big triangle wedge, and 0.7750 is a huge long-term support, goes back probably about 5 years. And we haven't seen the euro break lower versus the pound here. And what I'm suspecting is that it might be an extreme, too much euro bearishness in sentiment, and we may be starting to see a seller step in and selling the pound. And so when we see the pound, being sold against the euro, we see the euro pound moving higher. And so that's been an interesting thing, because especially the breakdown in the euro dollar, typically the euro pound would follow, and then we haven't seen that. And that is something that is an interesting kind of dichotomy going on with those two pairs right now.
Lydia, we got to talk about the oil market here. Now, I'm not sure if you do you do any direct trading in the oil market, any futures or any of the ETFs, the USO?
No, I do not trade oil directly, but what I have been able to do is kind of take advantage of some of the commodity dollars that kind of track oil, the Canadian dollar being one. And so I would trade the pound against the Canadian dollar. That's interesting, because you have this pound weakness, but then you also have this, Canadian dollar weakness because of the weakness in oil prices. And so any given week, you see one taking over the other. So when oil was really pushing lower the last several weeks in December, we saw the pound CAD move higher, but it didn't break out. And now what we've seen on the back of this pound weakness is that it's actually turned lower. So when you have these extreme moves in other in other markets, whether it be commodities or currencies, nothing is in exactly like a long-term 100% sure bet. You know, you still have to be nimble and pay attention to the actual chart that you're trading. A lot of traders kind of make the mistake that if you can correlate something in one market, it will translate perfectly in another. And that's just typically not the case.
So you were short Canadian dollar vis-a-vis the British pound. Is that the way you were trading it?
Right. So that would be long pound CAD up until the middle up until about the middle of the month, and then that trade turned sour, and I actually left it I left that pair alone because it wasn't correlating with oil. But when you started to see the trend in the pound, then there was a realization, like after it broke below $1.81, that this pair is actually tracking the pound and news and fundamentals and going on with the pound, and not really following the oil market. So we got some choppiness towards the end of the month where oil was breaking below $1.55, but you didn't see a clear trend higher as one would probably have expected. I know I had expected it, and it started to turn the other way.
Do you follow the South African rand?
I follow the rand. I don't trade it, but I do follow it.
Any thoughts?
I think the South African rand, I think the Nigerian naira, I think a lot of the those are also commodity dollars, and so when we're seeing this weakness in commodities, we're seeing weakness there as well. We're also seeing, but as emerging market currencies, as the dollar strengthens and throughout this dollar strength, we're also seeing those currencies weaken as well. And so there's a lot of things going on as well. And then you have emerging market bonds, because those tend to be high yield bonds, and we're seeing weakness in bond prices there. We're seeing those currencies cut. So there's a lot of different factors at play and why those currencies are moving the way they're moving.
And how about the Aussie D?
Australian dollars?
Yes.
Australian dollars, a mess. That one is a clear-cut mess, and what we had been seeing, as obviously I follow the pound Aussie, is that we saw a tremendous breakout in the pound Aussie, just even in December. And again, just like all the other pound pairs, it's also turned lower. But this is actually one of the pairs out of all the pound pairs that I really analyze and research. This one actually still looks very bullish to me, and this downturn right now in the pound Aussie looks like opportunity. It's going right into support, which former resistance, and into its 50% Fibonacci from this last leg higher if you look at the daily chart. So this one might prove to be a bullish opportunity or a buy opportunity, but we have to be careful because it is following pound fundamentals. We have the Bank of England coming out this week. We've had these misses in PMI numbers since Friday, and so it is still following the theme of weak sterling. So this one is probably you want to step in against a support level like we're seeing here. You probably want to step in after the announcement on Thursday before you try to take a stab at long.
Lydia, I want to ask you about the yen. I was looking at a post on your website called "Don't Trade Against the Central Bank." You put it up at the beginning of December, just a few weeks after Japan announced its massive QE program. Tell us about the yen.
So the yen right now, interestingly, this week at least, we're seeing yen strength. I saw that into the week open that we are seeing yen strength, but I think it's merely positioning. And I think, again, in particular with the pound yen, we're just seeing this theme of pound weakness, and it's just translating across the board. Now, this is one that may or may not be a long opportunity. And I said to take this one lower from where we were open around 184. So I was looking at 181, and we've broken below that today, again, on the back of the services PMI miss out of the UK. So this one is interesting, but it's still just falling into into fib level. So it's just still merely a correction. I think the yen is a long-term weak play. But again, like nothing moves in a straight line, and this is just one of those examples. And we're just seeing, I think, we're seeing a lot of positioning at the top of the year. A lot of people took profits. A lot of the big money took profits on the massive yen weakness move that we had seen in the last 2 months, 3 months of the year, or the last quarter. So I really think weak yen is still a long-term play. But right now, what we're seeing is positioning. And so the question, I know one of great traders that I follow on Twitter pose is, where is the big money going to put money? Where does big money start to work now that we're at the top of the year for the rest of the year? And I think when it comes to the yen in particular, if you're looking at the various yen pairs, what we are seeing is that kind of positioning. This correction is like opportunity. And so what levels do we feel like these opportunities could come in and money step in?
Lydia, I don't know if you were able to join us last Friday, but we had Fed Forecast 2015, and we had a lot of brilliant minds on, Thomas Simpson and David Wesson, and during the show we also had Ron and Sana and Peter Schiff, and they sure had one lively debate. I'm not sure where we ended up on their on interest rates, but what do you think about the interest rates going up this year? I mean, you talk to Peter Schiff, and we're on the end of on the brink of a global recession, and there's going to have to be QE4, and Ron's a little bit more sanguine. He thinks that right now the Fed is navigating the waters about as well as they can. What's your interest rate outlook for 2015?
No, I try not to predict what the Fed is going to do.
Okay, you try to react. I understand.
Put me out there. Yeah, just my thought. I'm really surprised of. I think Yellen did an about face on the last Fed meeting. It was surprising. She came in with a lot of perceptions that she was a dove, and she was anything but. At least at the top of last month, she was very hawkish. But we are in a deflationary period, and I don't know how the Fed could raise rates if we're not seeing prices go up, and the indicator to watch to determine whether the Fed will or will not raise rates is wage growth and wage inflation there, and I think that's the only thing that we need to pay attention to as far as whether or not we'll see rate rises from our Federal Reserve. We have employment numbers on Friday, and so that will be, the first kind of look at why Yellen was as hawkish as she was in December, because this is a report on the December numbers. So that will be our first indication. But I think Yellen is, she's a woman. So it's really hard for these economists to kind of determine what she's going to do. She's done nothing as expected when she was first made chair of the Federal Reserve. And so she's going to do her thing, and she's going to do what's right for the dollar and for the economy as far as she can, in terms of monetary policy. So I think that it's going to be very difficult for the economists to kind of determine what she's going to do. But I think that we should all really pay attention to wage inflation, even over, price, general price or consumer price inflation.
Now, see, if I said that, I would get in trouble.
Right, I have that. I have the privilege to do so.
You do. Lydia Finkley, Forex trader and author of FaithMightFX.com. Lydia, thanks so much for joining us. You really, the foreign currency market and the whole interest rate situation can be very complicated, but you talk about it in very straightforward terms, and even I can understand it. We really appreciate you coming on, and we know you're a frequent guest, and we'd love to have you on again.
Thanks, Joe. Thanks, Rihanna.
Thanks,
Take
Lydia.
care, guys.